Hi and welcome to Axis Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends and market moving factors that set the tone for the day. Whether you are a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in. Good morning on Monday, and we'll start with the global markets. The S&P 500 closed flat, posting a marginal decline of 0.03%. The Nasdaq slipped 0.09%, whereas the Dow fell 0.04%. US equity futures were flat in early Asian hours today. Asia Pacific markets traded mixed today as investors kicked off the final trading week of the year. Nikkei slid 0.6%, while the Topix lost 0.3% in the early hours. Moving on to the Indian markets, Nifty closed at 26,042 on Friday, ending the session with a loss of 100 points, whereas Bank Nifty settled at 59,011, down 172 points. Nifty saw mild profit booking of about 0.4% on Friday, but importantly, it found support near the 20-day SMA at 26,007, while also filling last Monday's bullish gap. The index formed a bearish candle with long shadows on both sides, signaling buying interest around the 20-day average, while Thursday's close now acts as immediate resistance. As long as Nifty holds about 25,993, a pullback towards 26,121 and then 26,200 remains possible, with 26,200 emerging as the key near-term hurdle. However, a decisive break below 25,993 could extend profit booking towards 25,880 and then 25,800. Meanwhile, the daily RSI slipping below its reference line suggests that short-term consolidation or mild profit booking is likely to persist. At the sector level, Nifty Metal was the top gainer, rising 0.6%, while Nifty IT was the biggest laggard with a sharp decline of 1%. Out of the 12 sectoral indices, only 3 closed in the green and 9 ended in the red, indicating broad-based weakness across sectors. Amongst the F&O stocks, Rail Vikas Nigam was the best performer with a gain of 12% due to improved market sentiment and pre-budget expectations. At the other end, Coforge was the worst performer, declining 3.7%. On derivatives, in the cash market, liquidity remained tight as FIIs recorded a net withdrawal of 318 crores, taking the month-to-date outflow to 11,563 crores. The rupee weakened by 15 paise against the US dollar to 89.86, adding to concerns around imported inflation. The derivatives setup also reflected caution. Nifty futures slipped with rising open interest, pointing to a clear short buildup. Bank Nifty futures also declined, but on long unwinding, with open interest contracting by 5.8%. Carry sentiment weakened, with the Nifty premium compressing to 18 points and the Bank Nifty premium narrowing from 69 to 54 points. Options data turned decisively bearish. The Nifty put-call ratio dropped sharply to 0.76 as aggressive call writing dominated, with call additions outpacing puts by nearly 10 times, establishing a strong resistance zone. Retail clients effectively underwrote institutional protection, leaving their positions vulnerable to any index reversal. Institutional positioning reinforced the bearish structure, while retail participants chased upside calls. FIIs and proprietary desks focused on heavy call writing and protective put buying. The FII index futures long-short ratio slipped further to a defensive 0.12 alongside additions in stock futures and sizable index put buying. Even though India VIX eased 0.71% to 9.13, this historically low level points to a volatility vacuum where even a small macro trigger could lead to outsized moves. Overall, the market remains trapped between 25,900 on the downside and 26,200 on the upside, with institutions positioned for a correction while retail appears to be chasing a short-term speculative rally. On commodities, gold and silver touched fresh highs on Friday, with silver surging 6.5% to close at $76.35. The rally marked silver's fifth consecutive gain, which was driven by strong investor sentiment amid persistent geopolitical tensions and expectations of further US interest rate cuts. From a technical perspective, gold and silver continue to trade with strong bullish momentum and are expected to form higher highs and higher lows in the coming sessions. WTI crude oil futures fell 2% to $57.1 per barrel in thin post-Christmas trading on Friday. The decline came as signs of progress in long-stalled Ukraine peace talks raised hopes that additional Russian supply could eventually return to an already oversupplied global oil market. That's it for today. Please note that this podcast serves solely for informational purposes and should not be considered as financial advice of any kind. For a comprehensive disclaimer, please visit our website. Thank you and see you tomorrow at the same time.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.